Hey everyone, welcome to Screw the Stock Market, the show where we talk about financial freedom and learning to invest outside of the traditional 401ks and the stock markets and the mutual funds. We really focus on taking control of our finances and our futures, all with the goal of being able to attain freedom, to be the best people, the best parents, the best, people that we can be to our society. And so today we have a really interesting guest. We've had quite a few crypto guests over the last few months and weeks. Now today we're talking to Josh Rhodes, who's done some pretty amazing things, and I don't know, there's something about his style. He's a Southern guy, and he just talks a little bit slower. He it feels like he just really explains everything at a level that is perfect for this kind of a medium, right? A 30-40 minute show, and he just really makes it seem approachable. And I love the fact that he connected everything to utility, right? Crypto is great, but one of the things that for me has been a concern, and I've lived it myself, is the idea of kind of that speculative thing of like, hey, I'm afraid of missing out, so I better buy this coin, whatever it is, now while it's cheap, expecting that it's going to be worth a lot more in the future. Well, no, that's not necessarily the best way to go. And what he talks about is, hey, let's bring it back to the utility. What is this technology going to do for society, for our world, and how is it going to change things? Those are the ones that I'm going to invest in if it's actually making a difference in the world. And he specifically called out Dogecoin as the one that as one of the ones that doesn't have any real practical utility. And so he pointed that one out as one not to invest in. So he really laid out his system and his roadmap, what he calls a flywheel, of just kind of how you can start this machine to get going, and get it to start building you wealth and growing you even wealthier and more and more and more. And that's exciting for me. So I hope you get a lot of value out of it. And again, his company is called Crypto, y'all, and I love it. It's just very approachable. It's not jargony, and I think it's something that we can all take some lessons from. Let me see what else. I wanted to point out some of the cool things because again, in the show over the last several weeks and months, we've had all these different great guests on talking about their approach to investing or their technology or whatever their lesson is for us. And that's great. But at the same time, from our perspective, from my perspective, maybe from your perspective, it's a little overwhelming, right? Because you only have so many dollars that you can invest in, and you can't be an expert in everything. And so one of the things I'm really trying to do, and Aziz is going to be trying to do also, is this idea of capturing like the truths that are consistent among all these different investors and all these different people, so that we can really try to take that and apply it to whatever works for you, right? If you decide you're a real estate guy, invest in real estate. If you decide you're a crypto gal, apply those same lessons to crypto. And I think we're starting to get there, and we're really going to be working towards that even more as we continue. So Aziz wasn't able to be on the call today, but I think he missed out. But I think going forward, you're going to see a lot more episodes from us. We're going to be moving towards a weekly show, and we're going to have some interviews and some episodes where it's just Aziz and I kind of talking and pontificating on what as we digest all this information that we're gathering. And hopefully you'll find that valuable too. We also want to invite, if you have been listening to the show and you have questions or other ideas about things that we should be covering, we want to welcome you to do that and engage with us. So our email for the show is info@screwthestockmarket.com, and we welcome that because we really want to start to engage more and give you more of what you want. So without any further ado, we're going to be talking to Josh Rhodes today, and I really hope you love it and hope you get a lot from it. So thanks a lot and enjoy the show. All right. Well, welcome, Josh. We're really excited to have you on the show today. Right now, Aziz is not with us, so it's a one-on-one show. I'm honored to have you just to myself this time. Thanks so much for being on the show. We're excited to get to know you and chat a little bit more about crypto with you. So, normally at the beginning of the show, what we do is we'll have our guests just introduce themselves, tell us a little bit about who they are, where they came from, and how they got to where they are. And then after
Mm,
that, we can jump into the real kind of meat and potatoes of crypto and your approach to how, to the lessons you want to share with our audience today. Does that seem
great.
fair?
Yeah, totally fair.
All right.
And being from Alabama, my vowel sounds are long, and so I talk a little slower. So you're either going to have to tell me to stop talking, or your listeners just need to put it on 2x speed, I guess. Whatever.
Fair enough. Fair enough. You be yourself, and I appreciate the warning. And there's no rush. That's the good thing about the podcast format, right? We could go all night if you want.
Yeah, man. Yeah, I grew up in Northwest Alabama, just out in the country, man. And family was basically, I grew up one generation removed from extreme poverty. I like to tell the story that my grandma made spaghetti sauce with ketchup oftentimes because she couldn't afford, ragu in a jar, and tomatoes weren't always growing out in the back. So, grew up in a place where people believed in y'all come on in and stay a while. Was a phrase that I heard a lot growing up. My parents, my grandparents, someone was at the door. They got invited in. There was hospitality. There was, hey, let's talk things over like friends do. And that's just kind of how I grew up. Grew up playing baseball. Ended up getting a baseball scholarship to play Division I baseball. First guy in my family, my entire line, to get a college degree. Um, Learned quickly that I was not going to make it into the major leagues. But I did meet my wife. I do have a beautiful family now because of that pathway. I did get a worthless international relations degree that did not earn me a lot of money in and of itself. But I made great relationships there, like a lot of people do, and got into small business, got into entrepreneurship and assets, and just owning assets. I read this crazy guy named Robert Kiyosaki wrote a book called Rich Dad Poor Dad, and I fell in love with the whole idea of passive income and real estate investing. And I started getting into the stock market early on. I started small businesses. I started my first online business was a Shopify store where I drop shipped fixed gear bicycles to hipsters in all the metro cities. I didn't know anything about hipsters, and I didn't know anything about fixed gear bicycles, but I was drop shipping them. I taught myself how to use Facebook ads, email marketing, took, just ragtag courses I could scrounge together online, and just started trying to acquire skills. If you're listening to this and you're trying to start a side hustle or you're trying to outpace your salary or something like that, just acquire skills. One of my favorite copywriters' name is Neville Medora. He says, become a triple threat. Like most people go through life with one skill. Then if you can become a double threat, that's awesome. But then if you're a triple threat, you can basically name your income. Your earning potential just goes through the roof. So I started doing that. I started learning things like SEO and Facebook ads and email marketing and like sales funnel building and all this stuff. And I started all these businesses. I'm on like business number 14 or 15. Like it's kind of like 80-20 principle. 20% of them actually work, but as a serial entrepreneur, that's just what I was doing. So there was a lot of failure. Like Groovy Bicycle was my drop shipping company. It burned to the ground. It just was not, I didn't know what I was doing, but I acquired skills in the process. So that was kind of the advent, if you will, of my business world journey, was just cutting a lot of teeth, earning ragtag money here and there, and putting it all together for my family that was growing.
Wait, there's a few questions I want to just before you
Okay,
continue.
sure.
So one of the questions I love whenever people ask about Rich Dad, whenever people mention Rich Dad Poor Dad, because it comes up a lot, as you can imagine, It's one of those books that for me just turns everything upside down. And I was, 15 years into my career when I read it. I'm always interested in learning when in your life you read that book and
Great.
how far along you were
Yes.
down a certain path before you maybe realized that there's this other path.
I remember walking into my home office as like a 16-year-old. Uh, I was flat bellied, 10 feet tall and bulletproof. Like nobody could stop me. And my mom was in there balancing the checkbook, which she did once a month for our family. And she was stressed out. My dad came home from Vietnam, started a lumber sales business, was a middleman wholesale lumber salesman. He may have earned six figures a couple of times in his life, like 2 years maybe. But we weren't like there. We weren't. I wasn't Richie Rich growing up by any stretch. So we were on a budget, and I remember mom pointing to this book on the shelf called Rich Dad Poor Dad, and saying, I wish you just tell, like she said, I wish you would read that book. And it was almost as if to say, it's too late for us to really embrace the philosophy that the author puts into the book. But man, if you could do it, it would change. Well, finally, when I dropped my ego 9 years later, I read it when I was well out of college. And yeah, that's when it just kind of did what it does for everybody else. It kind of turns you upside down and helps you think about finances and income and everything else differently. The cash flow quadrants were what really did it for me. Then and I've just been on a pursuit to go from employee to self-employed to business owner to investor since then. And that's just been the Candyland journey
Yeah.
that I've been on. And I'm still learning every day. But I have a lot of failure to stand on top of in between now and then. So anyway, I found crypto in 2017, right? So
Okay.
I got into real estate investing. I mean, 2008 though, I'm putting a for sale sign in the yard of a home that I'm flipping that I've done 80% of the work on as Bear Stearns is being announced over CNBC that they are going under. And the first dominoes were falling of the subprime mortgage crisis. And I'm sitting here with like this, I've got a lot of money sunk into this house. Like I
Mhm.
remember that. And so out of that, I don't know if you recall, but like 2009 is when Bitcoin actually came onto the scene. And it was in reaction basically to the central failure of the stock market, the greedy banks, the central government, everything that has control of central planning over you and I, and all the listeners, like the way we have money flow and the way we bank and who we bank with and where we get access to credit and all this stuff. It all came crumbling down for a lot of people, especially those who owned assets and equity markets like the stock market. So I signed off on the stock market. That's when I said, screw the stock market. I'm out.
Okay.
I don't trust the manipulation. I don't trust the lack of stewardship at the top. And it was obvious that the government was simply going to rush in and artificially stimulate whatever mistakes that the banks would do. And so I didn't know all that. I didn't know Bitcoin was on the scene though in 2009. It took me another 8 years to invest in crypto and really get my head around it. And so when I jumped into crypto, I wish I had a sexy romantic story, but I don't. I literally saw someone's social media post and FOMO'd in like a lot of people do. And I bought at the top at 2017. And then I figured out what I was doing. And then I fell in love and became almost religiously convicted over, oh my gosh, this is the future. And I started seeing, oh wow, this is like the internet back in the 90s. We're on to something here. And so ever since, I've just been really passionate about it. I'm a full-time crypto investor, run a hedge fund, do crypto education. My brand is called Crypto Y'all. So I'm trying to fuse that Southern hospitality with the greatest financial technology ever created, which is blockchain technology, smart contracts, cryptocurrency, and cryptography, and all of that merged together. Hopefully, Crypto Y'all can be an umbrella that people can find safety in because when I started researching, I didn't have the Robert Kiyosaki of crypto to run to. It was just like smarmy internet scammers and, shilling and rug pulls and all this stuff. Well, I'm hoping the brand and the idea, the philosophy behind Crypto Y'all will create not only a safe place for a few, but also help set a tone in the marketplace of trust for what is the greatest financial technology we've ever had. So that's my story, and I'm sticking to it.
I love that. That's really exciting. And the brand, first of all, the first thing you mentioned when we got on our call today is your accent and everything, and it's really beautiful how consistent it is with who you really are. And
Yeah,
um, but
thank you.
also I'll say too that as hosts, we've been looking for crypto guests, and it's kind of hard. We do have to try to vet a little bit because you know, it is actually beautiful. The feeling that I've had a few times with certain people who wanted to be on the show was that they were fast talking me, right? That they
Mm,
were
yeah.
going too fast and shouting jargon my way and hoping that maybe I wouldn't ask them to slow down and explain what they meant. And that's not the case with you. You talk nice and slow, and I have
Yeah,
no feeling that I'm being that it
yeah,
feels like whatever you're gonna say, I feel like you're really gonna understand what you're talking about before putting it out there. So with that, I think we're
yeah,
we're gonna make a little transition to jump into some of your
yeah.
thoughts on crypto
Cool.
because it's
Yeah,
scary, right? Like it's new, it's different, it's volatile, and as we speak right now, I think I don't know, I don't follow it super day to day, but I know crypto's had a bad run the last month or two along with the stock market, along with the
yeah,
economy and everything. So I want to give you a chance to talk to some of that. But obviously we're focused more on the long term and just kind of and what I like is also that you're talking you started off your conversation in terms of just the real inherent value that crypto will bring as opposed to this
yeah,
fear of missing out that hey it's on its way
yeah,
up and you should buy whatever it is now before it gets more expensive later, which is always kind of a scary idea of just I don't understand what I'm talking about, but I've done it. 2017, Aziz always tells a story. We got kind of, we just bought it too, same exact thing.
yeah,
And with that, I think I'm going to shut up a little bit and just let you go. So tell us a little bit
yeah,
more about some of the. Okay, so let's talk about our listener, right? Like generally, the way I try to position the show is for myself before I was able to quit my job, maybe before I
yeah,
had read Rich Dad Poor Dad, and I'm in this job that was, I'll say, it was a very decent job. I really actually liked it, but in
sure.
terms of the future that I saw for myself and my family by staying in that job it wasn't really the job the place where I wanted to be in my dreams. And
Yeah,
so that guy, Alex, a few years ago, in a job that he was really eager to get out of someday
yeah,
and looking to build wealth over the long term for future generations. And now he runs into Josh Rhodes. And what are you going to tell us about this opportunity? And we'll let you go from there.
yeah. I mean, I think where I have to start with, if I'm giving the, hey, what is crypto and what's the sales pitch?
Sure.
Um, I think going back and because it doesn't matter what you think about it or how you describe it if you don't look at history. And I think anyone who's looking to build wealth and anyone wanting to, I mean, whether you're wanting to create multiple streams of income or you're wanting to create a big old multi-generational purse of money, it doesn't matter. You've got to look backwards. You have to look at history because before you are wealthy, there are other people who are wealthy and there are other what I would just call market manipulators or titans of industry or predecessors. Like you got to know where the battleships are on the board. And so looking back, like even with my story on 2008 in Bear Stearns, and then the next year emerges the Bitcoin white paper and the Bitcoin peer-to-peer network and all of the things that you can look at and read for free, an 11-page white paper on Bitcoin and why it exists and what it's for. It's on Bitcoin.org. It's free to look at, and then you look at it and go, oh, what's happening? It's meant to make you and I the bank. Well, when you look at history, who is the wealth? Where is the wealth? It's the banks. And I'm not necessarily I'm not the guy that says all banks are evil, but I do think that they are self-serving, which is fine. That's cool. I'm a capitalist and we live in a capitalist society. However, there is massive corruption, there's massive greed, and those things do not have your self-interests in mind. That being said, we live in democracies and republics. Okay. So you got to think politically as well. You got to think about your core beliefs and you got to think about what is it that you really want. If you, the listener, or you, Alex, are sitting here and you're like, I want to be, if I want out of my job and I want to have time freedom, I want to be able to drive a van around the United States with my family and homeschool, or I want to just be able to go to Spain 4 times a year, or I want to surf on the Mexican coast whenever I want to, whatever that is that you want to do. To me, that reflects a level of autonomy and self sovereignty and self reliance. And that comes back to those not only skills, but philosophies and mindsets that you have to adopt. Okay, so let's say that's you. One of those scenarios, those dream scenarios that I just threw out there. For me, I love living here in Alabama with my family and going to church and running a business and letting my girls grow up in high school and enjoy life and like go to the Ritz Carlton every once in a while with my wife. Like that's just that's what I love, and I want to do that to its fullest. Okay. So, whatever your dream is, if you don't want a boss, then you need to become your own bank. Okay. Well, how do I become my own bank? Well, this awesome thing was set into motion called crypto. And the whole idea behind it is for us to become our own bank. It's for us to literally be bankless and to have a money system that is trustless. And keep in mind the key word there is trustless. It means it doesn't require a third party to provide accountability. It doesn't require a third party to provide governance. It doesn't require a third party to approve credit. All of those things that we currently just grew up in. Like it's just a system that we just grew up like as an entrepreneur trying to get a primary mortgage a few years ago, I thought I was going to have to give over one of my firstborn daughter. Like I just what the requirements are for trust in the financial system and collateral and all that stuff. Well, if you want to be self-autonomous, the most incredible expression that we've ever had in history of self-sovereignty and autonomy is crypto. It's a money system or collection of money systems that allows us to accumulate, store, and grow wealth without permission from a greedy banker or a central government. And it's an awesome thing. And that's kind of my pitch. Now, obviously, there's a lot of hows that go into that. We can dig into as many as you want. But to me, philosophically, that's where you got to start.
Love that. I mean, I think that's those are some really powerful places to start. Philosophy, skills that we're developing, and then sooner or later we hit the ground running, and the rubber meets the road, and we start making some progress. So, but I love and I totally agree that kind of your mindset and goal setting are kind of
Mm,
that's the step one, right? And
yes.
in terms of crypto, I mean, I think totally, like the show Screw the Stock Market, I always kind of tell people, kind of in full disclosure, it's kind of a marketing term, right? Hey, we're trying to like get people to listen who that resonates with because of that lack of trust with the system and the stewardship and the manipulation. But at the end of the day, really it's a show about freedom, right? It's a show for
Yeah.
people who want that freedom. And if crypto can be the way to help get
Yeah.
us there, now we're talking. So, um, So okay, so there's Bitcoin, there's other cryptos, obviously, there's other coins,
Yeah,
and we've even had a few guests on the show who've talked about, other types of blockchain technologies and how,
sure.
but maybe you could tell us a little bit more about your specific approach and some of the specific opportunities that you have for people to get to know you more and work with you.
The thing that I had to figure out when I got into crypto at first was like, okay, this could get really complex if I'm not careful. It can get like, I'm not a software developer. I'm not a blockchain developer. I don't know how to write code. I'm just this normal guy who, yeah, I can sell something, but like how do we get in, how do we get involved with tech, like the new age of technology, and not be a technologist, right? Well, we just
Yeah.
be investors. So a savvy investor then simply needs to know the playing field. Like I said, you just got to know where the battleships are on the board. And so um as a business owner, I've had residual capital and other windfalls that I've been able to utilize over the years to basically be the crash test dummy for a lot of people. Like, I mean, I've invested, I've got exposure to just almost any kind of crypto investment that you want to dream up, or have heard about. That doesn't mean they're all worth your capital. It just means I've got a lot of exposure to it. Everything from NFTs to metaverse, play to earn gaming, micro caps, mid caps, large caps, blue chips, currencies, you name it. I've if it's been in the blockchain realm, I've decentralized finance. I've basically gone through the crucible of crypto so far as an investor and as an educator and as an enthusiast, and I've come out the other side going, okay, I like this, I like this, and I like this. I looked at I basically looked at the different sectors, if you will, of crypto, and I created, I actually stole another analogy from another great business book called Good to Great by Jim Collins, and he has in that book the flywheel principle. So I extracted that, just always that, and the hedgehog principle really always just hit home to me as a business owner and as a leader. And I said, you know what? I can see it in my head. I drew it on a napkin, the crypto flywheel. And the flywheel had three wealth strategies built into the framework. And this is, I mean, this is what I teach. This is my thing with crypto, y'all. I show people how to animate their net worth with the crypto flywheel. And the framework is pretty simple. Number one, with crypto, you can create cash flow. There are opportunities to invest your capital and get a return that's far more aggressive than keeping your money in a checking account at Wells Fargo. It just is. Had a great one of my members recently said, "This is awesome." He had just gone through one of my DeFi session in my cohort, and he said, "This is awesome. I did a $50 test experiment because I encourage people to do little DCA like tests, dollar cost average tests, and just to kind of get your feet wet. Kind of what's it look like to earn a percentage of capital back every day?" And he's like, "Wow, I have earned $12 on $50 over the last month. Now I had $30,000 sitting in a checking account, and I earned 20 cents on that cash." So the point there, to echo Ray Dalio, is that cash is trash. Is that if it's sitting there by itself without accelerants, it loses value, or it just is stagnant. The invisible tax there being inflation. So he didn't really make 20 cents. He actually lost a lot more than that. That being said, what would happen if he had that money deployed intelligently? So cash flow, again, going back to Kiyosaki, going back to anyone you follow that teaches you that multimillionaires have multiple streams of income, usually on average eight or nine. And so I was like, wow, okay, I have rental properties, I have income coming in. Now I can have crypto properties that I can have income coming in. And so I established and just figured that out and made that a part of my framework. So crypto flywheel section 1 was cash flow. Then I moved to the second part, which is the other property or characteristic of digital assets, and that is that they are accretive when properly designed. Certain cryptocurrencies and Bitcoin are accretive in value, just like real estate, just like stocks can be, just like a small business that you start can be. Like, depending on the bones and the structure and the anatomy and the utility of it all. And so the second part of the flywheel is what I call appreciation. I know it's original. Um, and this is just the bedrock of your crypto investing portfolio. These are the things that you believe in, that you think are the future social fabric or scaffolding of our society. Okay, things like Bitcoin or Ethereum. One that I really love, not shilling this, not my crypto. Chainlink. They're an Oracle service. So what I'm looking for in the second part of the phase or the second part of the flywheel are things like that have utility, like can they make money or save money or time for real world businesses and people? Do they have utility? Like Dogecoin, no utility. Shiba Inu, no utility, right? A lot of these NFT JPEGs that you see, no utility. But you might have an NFT that fits into a metaverse game that acts as property that you can resell and provides you residual income. Okay, that's utility. Let's fit that into the flywheel. So not all crypto are created equal, but I'm using the cash flow from part 1 of the flywheel to increase my equity. Sound familiar? Increase my equity in stronger positions in the blue chip cryptos that make up the future of what I believe or what you believe are the future of society. A lot of people believe in XRP. It's a massive financial system utility that could potentially replace the SWIFT system, literally the way all banks exchange money amongst each other. Okay, that's a bet I'm willing to take in the second part of my flywheel. Bitcoin, store of value, long term, digital gold. Ethereum, programmable money. 70% of all cryptocurrencies built on top of Ethereum. It's like Ruby on Rails for crypto, right? So, like, knowing your stuff matters, and that's the second part of my flywheel is where I'm like, okay, this is my study, this is my belief system, and this is what I'm going to use as my portfolio, my wealth, the bedrock of my wealth. And then the last part of the flywheel, the third little wealth strategy, is leverage. And this
Also
is
familiar.
yes, this is a feature that's familiar in real estate. It's familiar in whole life, universal, infinite banking, life insurance. When you have cash value on an asset, you can take loans against it, use it as collateral, and go buy more cash flow. And so Elon Musk does this, Bezos does this. We can do it too. And one of the great things about crypto is that, again, it's trustless, meaning it's on an open ledger. So anyone at any time can see what's happening. What are the whales doing? Are they buying? Are they selling? And so, because of the trustless uh, nature of blockchain, they don't a lender doesn't they don't care what my credit score is. They don't care what my occupation is. They don't care what I do for a living. They don't care what race, gender, ethnicity I am. They don't care about what the debt to income ratio is. They just care, do you own, with a smart contract address, Bitcoin or stablecoin or Ethereum, whatever the qualifying collateral is, and you simply say yes. And you can hold it in escrow as a custodial service and give me X amount of dollars in return, 35%, 50%, 75% loan to value. I'm going to take this cash and I'm going to make more money with it. And so last year during the bull run, I used my Bitcoin as collateral, and I bought 2 rental properties. And then, of course, I use the rental property income to offset the loan against my Bitcoin. And now I own Bitcoin plus two rental properties. But I could have used that to buy more Bitcoin. I could have
Mm.
used that to buy Ethereum. I could have, there's a lot you can do, whatever. I could do it to fund a whole life insurance policy. Um, the, the, the blockchain technology and the open ledger nature are things that maybe listeners want to really into, because that's the great differentiator between this sixth emerging asset class called crypto asset classes. No other asset class has an open ledger that is not controlled by a central planner. My strategy, that the crypto flywheel has those three wealth building strategies kind of grafted into its nature.
I love that. I love that. That is all very relatable to me as a real estate guy. And it makes sense. And that's just super concise. I think I've been drawing it as you've been talking here,
Yeah.
and I can see it happening, and it looks a lot like a real estate kind of flywheel, right? Um, maybe maybe most of us probably need leverage first before we can even get into something for
So
real
let's
estate,
talk
right?
about that. Let's talk about
Okay,
that actually.
sure.
So this is the fun part where we can debate real estate and crypto.
Okay, sure.
Because we can already, which real estate's about 20% of my portfolio now, 80% crypto. So I'm a Pareto principle kind of guy. But the um the thing about crypto that you don't have to deal with real estate is accessibility and
Mm,
speed and velocity. The trade-off though is you have to be cool with volatility. But volatility, a lot of times with um, lack of financial literacy, people think volatility is bad. They think risk is bad. No, risk is a tool that you leverage to take advantage of markets, right? And so the thing about crypto is like, okay, let's say you and I have a multifamily, 100 door complex that we're going to buy, right? We want to buy, but we don't have the capital, so we're going to syndicate. And okay, we got to go recruit. So assuming, or let's just say traditional financing. Let's just say we're going to go through the banks. Either way, assuming you and I even negotiate during this market and get the deal and like agree on the price and beat the other 15 people in line, then it's underwriting time. We might close in 30 to 60 days, maybe. Then we've got the property. Do we have cash flow? Do we have to place tenants? Do we have to, it's all the stuff. Okay.
yeah,
But that's real estate. And in real estate is it's a an apex asset class. But let's say somebody has 20 grand sitting around, 5 grand, $1,000 sitting around. In the next 20 minutes, you can be earning 0.5% a day on that capital just in the next 20 minutes on the blockchain, on a blockchain, on in crypto, in DeFi or somewhere else. And so you've got to start going, okay, where can I take advantage of speed and momentum in the marketplace? Where and it's kind of like Warren Buffett says, there's no such thing as a bad market. It's just bad market entries. If you watch these guys that are multi-billionaires, when everyone else is FOMOing in, when everyone else's human psychology is at its apex, they are patient, waiting in the wings, and then crashes happen, and they jump in and they scoop it all up. I think Buffett just made a $500 million purchase of some company. It was just like oil or something. I can't remember, but just out of nowhere on a whim. But it wasn't on a whim. It was educated, it was timely, and it was patient. And that's why the flywheel, I had to create the flywheel because I knew that if I did not create parameters for my humanity, then my emotions would control my finances and my capital. And that's just what we've got to hotwire and not allow to happen.
I like it. Yeah, and I'll say, like, to your point, I would love to buy an apartment complex every day, but
Yeah.
it's challenging. There's a lot of work to it, and especially when I've been selling homes as a residential realtor, I might make a $10,000 commission, and that's not enough to buy a single family house or an apartment complex or
Sure.
anything.
Yeah.
And okay, so I just put it in the bank and wait until I grow, until I
Yeah.
pile up enough to really make a big move.
Yeah.
And I love this because that's one of the things that I think I've been looking for, is just something where I can make smaller moves in
Yeah.
the meantime, right? Like, I still
Yes.
want apartment buildings and as much real
Right.
estate as I can buy, but
And
it's
that's the
just
failure of my illustration too. Is like we're not all trying to buy 100-door apartment complexes. Some of us just want to make better use of the 500 extra dollars we've got in the checking account, but we don't want it in the checking account. Where's a better vehicle,
exactly.
right?
No,
So,
that's really exciting. So then the first point, which again, going back to my limited real estate mind, cash flow. I still don't really understand how that works in crypto, right? So for a single family
oh
home, it
yeah,
makes sense to me. Someone wants to live there and they pay me a
yes,
certain chunk of money every month for that, right?
right.
How do you get cash flow in crypto? And
Great
I
question.
don't necessarily expect you to give away all your secrets, but if you can
No,
just
no, no.
explain a
This
little more,
is
I'd appreciate
no,
that. Yeah,
this is industry knowledge. I mean,
sure.
the trick and the secrets come into how do you vet, qualify, and choose vehicles, because not all are created equal. Not all investments are created equal, right? But the
Sure.
general structure and what allows, for example, DeFi to pay residuals
I'm sorry, you said
is
DeFi a few times and I don't know what that is.
decentralized finance.
Oh, okay,
Sorry,
thanks.
that's jargon. Um, so decentralized finance, think about it obviously as the antonym to banking, and it's honestly syndication is what it really is. It's just facilitated by a smart contract typically, um, rather than a syndication leader or manager or a fund host. And so uh, let me start here. Anything besides Bitcoin though is called an altcoin, alternative coin. And basically, all altcoins are software companies. So if you're out there going, man, this crypto thing is nebulous. Hey, just let's cut to the chase. These are just a bunch of software companies, and they're creating utilities, hopefully. And it's just literally imagine buying Windows 98 Microsoft, except they have currencies and they're using a new technology called blockchain. All right, blockchain contains, again, without getting too far into the weeds, smart contracts. What are smart contracts? These are contracts that are algorithmically or they're programmatically they're pre-programmed to govern a relationship between peers. So Alex and Josh, um, Alex wants to buy Josh's house or buy Josh's car, and um, we don't want to go through the traditional banking system. So you can use Bitcoin, and I can use Bitcoin, and you can just send me Bitcoin over the Bitcoin network. And the Bitcoin blockchain network is going to verify and validate and permit that transaction from happening, or not prevent it, but to allow it to happen. And boom, we just enjoyed a blockchain peer to peer interaction. Okay, well, let's take that up a notch. Let's go to decentralized finance, where me and Alex and 30,000 other people invest in a particular decentralized finance investment opportunity, a particular crypto. And I won't go into all the reasons all the characteristics of this particular crypto, but we'll just call it crypto A. Well, we've just put our money into the big pool, all right, with the other 30,000 investors. Now it's basically a hedge fund. It's just decentralized, as in it's not governed by a central bank or a central government. And it's governed by smart contracts. And the smart contract says if A happens, then B happens. So usually what we're doing is lending. We're taking our pool of money and we're moving it into the marketplace, out into the crypto marketplace, and we're lending our money for a larger yield. And then they bring the yield back to the treasury, and then the treasury, via smart contracts, redistribute the yields to Alex and Josh automatically, algorithmically, and precisely because it's all unemotional, software that doesn't get tired. And so many times your DeFi, I've got one open on my browser right now. I'm watching my rewards come in literally every 10 seconds fractionally. So you can just see it coming in, and then you can harvest it whenever you want to and put it in your bank account if you want to do that, pay bills, or reinvest it into the flywheel like I was talking about earlier. And so it's doing what all the big banks have done with our money all our lives, except now we're doing it together, and we're using a trustless banking system to get us higher yields. So instead of getting 0.002% on your $10,000, what if you could get 1% a day? What if you could get 100% a year? What if you could get 20% a year? There's there's speculation and sustainability around all of that, but I'm just saying that's the future, and that's what those are the games that we're playing now.
Amazing. Okay, I did not understand that. So, no, I mean, I do now. So,
Sure.
uh, that is really exciting. So, um, so essentially, the analogy again, going back to my real estate stuff, is the idea of a title company, right? If I make a contract with you to buy your
Yes.
house or something, we need this title company to be this neutral intermediary to collect the money and make all the distributions. And now
Yes.
we don't need the title company. We would have a smart contract just
And the
execute what we got agreed to.
the irony of your example is that I know I have friends in the title industry, and they are at conferences now, and they're talking about, oh my gosh, blockchain, like this legislature, this legislator, we might actually be out of a business here soon because smart
Crap.
contracts can facilitate these trustless verifications without humans and without bureaucracy. Yeah, the thing that allowed me to understand crypto was real estate. It's like the county courthouse that has the deed to the property. I mean, that's basically what NFTs are. They're just proof of ownership. They just show that the owner has title, has benefits to this asset. And this asset, NFTs started out with art, right? We
Mhm.
make fun of the Bored Ape yacht clubs that people spend $100,000 on. Well, NFTs are non fungible tokens. They are tokens of ownership. They are not interchangeable. Non fungible meaning you can't just switch one for another because they're all unique. Just like my house, you can't just take my house off of its foundation and swap it for yours, and nothing, it's not fungible. So we need to have deeds that are non fungible, but also to anything we own in life. And so that's where I mean, I'm telling you, medical record storage, the way we do debit and credit cards, the way we do real estate transactions, the way we do peer to peer interactions, the way we vote, the way we live in homeowners associations, the way we distribute benefits to veterans of foreign wars. Like the list goes on. Blockchain is going to permeate every sector that we interact with in every industry in the next 5 to 10 years. I mean, video games, we're already there. I mean, Chase Bank, Jamie Dimon, they own multi-million-dollar pieces of digital real estate in Decentraland, the first metaverse gaming platform that actually launched in 2018.
Huh.
They now own literally millions of dollars of digital real estate there. They built a bank lounge for Chase Bank customers to enjoy virtually VR. Like it's there. The big
That's so
institutional money's
interesting.
coming. It's happening.
And what's interesting about that is I think I seem to remember that he was not a big fan of
That's
crypto
right.
pretty
Yeah,
early on.
that's right.
Um, Let me look at this flywheel again. I think you blew my mind a little bit here. So I have crypto. I can go out and lend it and make cash flow from it. And then we're looking at the utility as kind of the main driver for which ones we think will appreciate and hold value. And then in the leverage, now the leverage is actually, in this case, we're borrowing. in this, is it the same
Yeah.
marketplace where we were lending previously?
Nope. You just
Okay.
you're gonna work with particular lenders who have programs just like with mortgages.
Yeah.
Some mortgage brokers are going to have a great VA loan. Some brokers are going to have a no down payment loan. Some brokers are going to have a low credit loan. Whatever. You got to find these custodial exchanges, and right now they're getting hit pretty hard in the industry. The strong will survive,
Mhm.
but the ones who are sturdy have enough solvency and liquidity to say, okay, Josh, you own $1 million in Bitcoin. We'll give you 50% loan to value. So we'll let you. We'll have $500,000 in your bank in the next 48 hours. It's fast. There's no closing. They're just saying, hey, you've just got to transfer custody of. They're holding it hostage. But you can also during bear markets. This is a pro. During bear markets, and they happen. Like basically Bitcoin's on a 4-year cycle. It just happens. It's patternistic. It happens. And so whenever you see these big dips, both in equity markets or any other market, um, what you can do in crypto to hedge against volatility, because here's the big like red X warning sign when you're in the leverage part of the flywheel. You've got to protect yourself against margin calls or liquidation prices. Meaning, if my $1 million in Bitcoin goes down 60% in value, and now that Bitcoin that I gave them custody of is now worth $600,000, and I borrowed my 50% loan to value. Now I'm 90% loan to value. I'm out of margin, and they're going to have a margin call and potentially just liquidate me, take all of my Bitcoin. I don't want that because I know Bitcoin's going to go back up to a million or more, and I want my Bitcoin back. So how do you do that? Well, simple. Right before you go to lend, you can just simply sell your Bitcoin for USDC or a stable coin, which is pegged to the US dollar. And you got to stay away from the algorithmic stable coins. They've gotten into a lot of trouble lately, but you want to go to stable coin that has actual reserve currency in a bank or in a vault or in custody that actually represents the backing of the USDC, the US stable coin that you're buying, then that's pegged to the US dollar. It's not going to be volatile at all. It's going to stay right around a dollar. And so then there's no liquidation fears, there's no margin calls, and you still get the same amount of money, the same loan to value ratio, just without the volatility. So usually that's how I do it. I take my Bitcoin, buy the stable coin, do the loan, take the cash, go buy more cash flow, pay off the loan, etc. So some might argue though, and that's what I do in a bear market. In a bull market, though, it's very possible that you get in there, you give them your Bitcoin, you give them your Ethereum, something that is accretive. And let's say you take $100,000 of Bitcoin and you give them custody, you take $50,000 loan. Well, it could go up to $150,000. Well, I can ask the lender simply to use the appreciated value of the Bitcoin. I can liquidate a part of that to pay the loan off, and now I'm whole. And basically, the Bitcoin paid the loan for me
What?
because of the accretive nature of the asset.
S-
It's wacky.
So
It's
now it's
wacky,
worth
but
more,
it's real.
and you just say, "Hey, take that extra value. You can keep it."
Yeah.
And oh my gosh,
Yep. Yeah. It's nuts. But it's the same as saying, "Hey, I bought this real estate. I have this loan against it. I could just sell the real estate and pay off the loan and take the profits, just like a flip." It's basically
yeah,
the same. You're just moving money. It's just different. It's just not a physical asset.
how cool. Well, I guess we're running about 50 minutes now. So I've really enjoyed this. But before we end, I really want to give you a chance to just share with our audience any last
Mm,
messages that you want to give about more particularly working with you, or what
yeah,
exactly how they should contact you to
yeah.
get involved
I
more.
would love to work. I would love to help your audience and work with them if I have the opportunity to. basically 3 ways to interact with crypto y'all and with me, Josh. First way, if you're just like, hey, you know what, I just want to learn a little bit more about crypto. Like, can you tell me more? I've got a case study. So the main home base is cryptoyall.com. Crypto y'all, no apostrophe, just cryptoyall.com. And there we'll show you a case study, if you want to just listen to me talk a little bit or join a free training there, that's easy. Maybe you can download. The second thing is you can download a free sample or demo of my newsletter. I have a crypto y'all newsletter where I talk about particular crypto projects. It is a paid, but I've got a free option or a free sample for you there. It's a professional grade newsletter for people, kind of like a Motley Fool type approach. And then the last thing, the more personal thing, if you're just someone who's looking for like more high touch, more learning environment, more immersion into the topic, and you're ready to like put your crypto flywheel to work, you want to like get your plan together and have that framework, and you want me to teach it to you personally, then I have a cohort. I do about 10 people at a time. I take them through the crypto flywheel. I've got a 4 session cohort training session that you can join. It's very boutique. It's very organic. I'm not out to get a million clients there. So it's basically based on my bandwidth. But from time to time, I've got openings and you can join the cohort and walk with me and have unlimited access to me and my Discord community and my intellectual property. And I've got all this training that take people through. And so all of that's possible. Yeah, you're welcome to go to the URL cryptoyall.com. Or you can email me personally. Just email me personally, Josh at cryptoyall.co. There's that URL, the email is a little different than my homepage. It's cryptoyall.co, Josh at cryptoyall.co. I answer those personally. So that's it.
Josh, thank you so much. Again, I really do want to say how much I appreciate your style and your slower pace of really explaining. I really feel like I understand um,
Good.
everything you've discussed, and I love the idea of this flywheel. I think that's just on another level. So really, thank you so much, and I think our audience is going to love what you've shared with us today.
Great.
Thank you.
Honor to be here. Thank
All
you.
right.